Hey everybody, today is July 11th, 2023, and today we're going to talk about the stock market. We'll talk about the recent recovery from this brief pullback and whether I believe this uptrend can continue or whether we will continue to consolidate or perhaps go even lower. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so first of all, I just want to say I hope everybody had a great 4th of July holiday weekend. Again, I'm sorry I didn't make a video last week. I had several family members come over, so I was basically just entertaining them, and yeah, they stayed a little bit longer, and yeah, I just didn't really have the time to do a video, but hopefully we can get a much more consistent schedule going from now on, because I don't think there's going to be much holidays coming up soon, right? So yeah, so in our previous video we talked about or previously, and this is my Twitter page, EddieLux_, please follow me if you haven't yet. But basically, the gist of it is, I've been saying throughout this year, we've been consolidating between 42 and 3,800, right? On the S&P, when we finally broke out, we would have a nice breakout uptrend, right? But now we're starting to consolidate, right, around this previous swing high area, around 4,300, right, which was also the kiss of death, the 200-day moving average before a plunge, right, not being able to break above. So now that we seem to have come down recently to try to retest that level, right? And I said in my last video that if we do have a pullback, we generally don't want, after a breakout from a long, year-long range, for us to come down and retest this, right? We generally want a shallow pullback, and that's basically what we've been seeing. Is we've seen a relatively shallow pullback, and now we've not only recovered, we actually came up and actually took out the previous local high. And now, of course, we're pulling back a little bit. But the most important thing is that we keep these, this resistance level. We keep at least trying to break above. We want to be persistent in trying to break above this resistance level, right? Usually, the more times resistance or support is tested, the more likely it is to break, right? Another thing is we want to continue to make higher lows, right? And this is basically a ascending triangle pattern, which could eventually break out, right? Not saying it can't consolidate a little bit more, but yeah, generally we want to see at least higher lows and to see the market consistently try to retest the resistance level, because it's more likely to break through, right? So my past couple of posts, just kind of following the weekly chart, we've had quite a spectacular rally over the last couple of weeks, and so it wasn't surprising that we had a bit of a pullback, right? I mean, look at this. We had 5 straight green weekly candles in a row, and then now we just have a couple of red candles, right? To sort of, some people are going to take some profits, right? Especially as we hit we're going to get close to overbought on the weekly. But right now, oscillators on the daily chart, after hitting overbought, are starting to look. Let me just zoom in on the RSI. After hitting overbought, now we're getting towards neutral territory, right? So as the price continues to consolidate, we're basically resetting oscillators from overbought to neutral territory. Now, interestingly, the fear and greed is actually in extreme greed still, and we do have recently we did have some volatility buying over the last couple of sessions, but it does seem like the stock market is starting to digest any fear or any sellers, because we basically continue to chop sideways, right? And like I said, as long as we maintain higher lows and we continue to try to break the resistance, I'm optimistic that this will continue to go higher. Now, of course, we have a catalyst event, right? We have this CPI, and of course, we have future Fed meetings, right? So that's obviously going to be a catalyst event, right? If CPI continues to, we've been going down, inflation has been going down the last couple sessions, or last several reports, right? And so that's been basically driving the stock prices higher, as people believe that the Fed will either, well, they paused last time, right? And but if the CPI, if the inflation print is cooler than expected, then the Fed might continue their pause and perhaps even cut, right? Now, I personally don't believe they're going to cut until 2024, but anything's possible if inflation gets closer to 2%, right, which is the Fed's target rate. So right now, the terminal rates are over 5%, and the Fed funds rate is also over 5%. So the market believes that there could be at least 1 or 2 more hikes. And in our last meeting, even though they said they were going to pause rate hikes, they left the window open to perhaps raise hikes at least once or twice more this year, right? Perhaps 25 basis points each. And so the market didn't necessarily take that too well, but it wasn't like too bad as well. So it was sort of like kind of like cautious optimism, sort of. So basically, we saw last month the market sort of chopped sideways a little bit, and now we're starting to consolidate ahead of this next CPI report. So yeah, if it's cooler than expected, we can expect to see the market rip up higher, right? If it is hotter than expected, perhaps come down, which is not necessarily a bad thing. Again, we are moving. I wouldn't say parabolic, but we are it is like a spirited up move, right? You can see the moving averages here starting to move apart, right? Generally, we want the moving averages to be a lot closer together while we move up, because it generally suggests a much more sustainable uptrend, right? And usually that will require the price to pull back a little bit, right? But as long as we're making higher lows in the grand scheme of things, right, it's not too bad. So even though I said that I would rather see us push up higher instead of come down and retest this low here, again, a gap over here, it's not necessarily a bad thing, especially when you're starting to see the moving averages starting to spread apart, right, like that. Coming down to retest the moving averages and give them time to reset. Also with the oscillators, having the oscillators reset to more neutral territory, right, is not necessarily a bad thing. So overall, just to summarize, the stock market is looking really good right now. We broke out of this year-long trend, and right now what we need to do is just sustain this trend, right? We don't want to see it pull back too much. It's okay if it has a little pullback, especially if the CPI report is a little hotter than expected, right? We might have a pullback to come down, retest maybe this 50-day moving average, Fibonacci support level, maybe this gap right down here to fill the gap. As long as we make higher lows and higher highs in the grand scheme of things, should be fine. So that's what I'm looking forward to. Obviously, we won't know until the CPI report comes out, but yeah, so that's it for today, I guess. And next week, we'll definitely update you. And I'll put a chart out on Thursday after the CPI report is out, and we'll see how that affects the market going forward. Thank you for watching this video. Don't forget to like, subscribe, and leave a comment below. I appreciate all your support. Thank you again, and have a great day.